Hello. Sorry, I'm going to. I tried to broadcast live at the same time I was explaining. It's been a mess for me actually, and I'm going to use to not to trade live while I'm speaking because I really made a mess. Okay, so uh, this today's session, I thought it was good just to offer a English session to explain the basics of the other videos here. So I'm not going to cover all the contents but just to for you to make an idea of general idea of what I'm explaining on this channel, and what of all, and and that would allow you to understand better what I'm saying. So everything I explain, it's a interpretation of, well, mostly 99 95% of what I'm explaining here, or 90%, is it's a interpretation and a summary of certain aspects from ICT, from Inner Circle Trader, which is Michael Huddleston, the author of all those series and the channel, the owner of the channel, and he is maybe the person who has put words to a lot of things that no one had in the past, and uh, used like explaining in with precise terms, precise levels, precise candles, precise uh, structures, how an a hypothetical um, institution that um is just like an agent who has a perfect knowledge and control of the market, over the market, how that entity, institution, we'll say, is trading. So based upon that, a criteria that an online algorithm that knows everything that's going to happen in the future, how would that algorithm be trading, or how that institution that acts in the same similar manner. So the idea is that liquidity, it's mostly on the edges and the accumulations, and you can do it and you can check it very easily using a profile. It's nothing that is just a supposition. It's not. It's an hypothesis and theory. It's true. It's like that, and you can use a indicator. For instance, this one. If I use the fixed range, I take this range from the top, and I move to the lowest low. Just if I go from here to there, this is Binance. So of course you can see how volume resides here. Can you see? It's not something that cannot be tested. That is not a story that is embedded. No, it's true. Here you see here. Okay, here there's a lot of volume too, but also here, this is the order block. This is the order block. So the last down move contains basically all the volume, unequal in volume. And what is the other volume here? See here above. Now you can see how the volume resides here at the order block, which is the order block here. What commenced this down move? What started from the last up move that starts here, from here into here, or from here to here. So if I want to move this to this move, this is the last up move. So in this case, yes, in this case, I think my first assumption was better. It was this here. Okay, yes, it was the last up move. So here is where all this volume resides within this consolidation here. If I take this high and now move to this low, just a range, a random range. Which is the last up move. So the last up move is this candle right here above this. With the volume located here within this last candle. Now it's something that everyone can test, so there is not there is not an excuse to just say, no, I think that this would be, no, there is, we live in the information society, in the information area, so it is everyone's responsibility to check things because we have that information here. So basically we know that volume resides at or beyond the last up move or the last down move before a range or an expansion when it happens. So this means that that algorithm, that now's market, is just allocating orders at those areas because those areas contain more volume than the rest. So this starts what would be the order block theory or the flow theory that explained. And then we have also the structure. So the structure, what it means is that we have this. So we take major highs, major lows. We start to draw lines. And now you can see how it's very easy just to see that the current tendency is negative. So it is descending. Price is moving down. I don't like to say bearish, not bullish, not bullish. I don't like to say trend. I think it's a big mistake using those words. Now, so prices are moving down. So the second thing that we know and explain is that what is doing smart money, which is this money that is used by those entities or for that hypothetical algorithm. Because in any case, what we are doing is just to optimize our trading based upon optimization models. So if I would like I don't mind if there is a precise entity right now doing that or it isn't. What I know is that the market behaves using that optimization model, and I know that these highs are going to be read before prices move down because the algorithm is taking at the best price the others, so the others must be taken here above these highs, and where should they be delivered at the best and at the best lower price. Okay, so the lower price will be there will be volume left to be covered. So in any case, when prices just move up here, so you have a lot of just plain, and it's really difficult to do it in a few minutes. So when prices just are moving down, they will be taking highs all the time. They will be taking highs, eventually creating highs and taking highs. And then when prices start to move up, they will start to do the opposite, which means that in terms of structure, this is what markets will do when they're moving down. They will be taking lows, taking lows, taking lows, taken. And when markets are moving up, they will be taking highs. Like this, taking highs. Eventually this high, and this high. And that's all. This is the market structure that we're looking for to identify. Of course, this doesn't happen in that direct manner mostly, but we do it to zoom out and see generally what's happening here. So prices are moving down. We don't have any reason here to buy. It doesn't mean that we will have a reason to sell, but we don't have no reason to buy from that global structure. So now here, when we see here, what we can see now is just that above this line here, okay, the last move, this line here, above this high here, swing high here, when prices are within this range, we have here liquidity, we have here below liquidities. Prices are going to move to either of those sides and take probably first, you see they take this high before they return back into what, into the consolidation, maybe now to take more liquidity, orders to be allocated above this high here. So probably at this low time frame and seeing that, even we have here almost barely equal lows, we also have a higher low, which is so it's a bit bullish, the intent, so that may be explaining this rally here. And we could think that this order block it's reacting indeed and has reacted already, could be also moving more orders to the upside. Okay, and besides, when we look at the markets, we see these equal lows here. Okay, that could be rate also into this order block here to still move higher, which is not precise, but it could happen. I mean, it's not necessary. And so let's go to a lower time frame that would allow us to see better what's happening here. So I just taken randomly the 8-minute chart. I didn't. So we have this order block on the other time frame. So an order block to the high. This is not ICT order block. This is just the order block as I usually explain it on my videos. So we have the order block. Prices are reacting to this order block. So where will be this price be moving? Here to these lows. So which is the next order block we have below. And when I say order block, I mean the last pool of bullish liquidity. I'm not really saying the last ICT order block, because ICT is Michael. He knows his system. We can interpret it. We can think. We understand certain things, but we don't have his insight. We don't have his experience. We don't have his ability, accuracy to understand what he's doing and explaining. So we try to adapt what we see to what we understand, or to what our skills allow us to. So now we are, of course, on the 8-minute chart, and in relationship to the 1-hour chart, we are moving. We have this up down trend now, and then we start to also identify. We start to identify what he calls the market maker model, and there are two market maker models, which are the buy and the sell model. And so this is everything is fractal too, so everything happens at several scales at the same time. So we could see, I would say, if I would be seeing this one, that this would be now on hindsight, of course, I would see this first level of the move, the second level here, and the third level here of the market maker model. And he has now free videos on YouTube when he's explaining the market maker model in more detail. And it's completed. This is the distribution of prices to the upside ends, and now it's just accumulating to the downside and creating also a market maker model, which will be a bullish market maker model. It's 15 minutes probably, because it's too okay. Now here it's clear. So when you have level 1 and we have level 2 and we have level 3, this other block should be holding, because you see this high has been taken out and this other block has not been tested yet fully. So if we see the last up move and we would like to refine, we could take, sorry, because I'm explaining how I'm doing it, know how Michael and others can be understanding it. We should be taking this area right here, and it has not been reached yet, so it's positive from that perspective, because it means that probably this other block is going to hold. So now prices probably will be just taking out these highs here, but also the liquidity is inside this area of accumulation, because this is a imbalance. And you can check for value gaps and imbalance on YouTube or my videos as well. And it only means that there is low low liquidity here. So low liquidity is not something that it's going to just reject prices to this or down to all this area. If prices are moving down, probably it's because they've been releasing orders here. So orders now they are just accumulating more buy orders in order to take. Sorry, I have another call. Sorry, I will be coming back in a few minutes. What we're going to say is that probably this bullish order block would hold. So now let's go to the 15-second chart and see if there is a market maker buy model, and if we see a break in structure when we reach this area, and if this happened, then we could be thinking in entering. We also could be refining 1 minute here, for instance, to see and find other blocks that would be available for a buy. And in this case, we can see this last area here that this week. Okay, this could be part if we tested here. So maybe this area could be used refined to enter this trade. So here, put this area here, and I'm coming back in 1 minute and continuing. I need to mute my microphone right now, but just look at this area here and see if you see breaking structure here, creation of other blocks, etc. And do it in lower time frame, like 15-second chart. 1 second. Okay, I had a phone call. So let's continue with the explanation. Um, Now again, it's the same any time frame. Any time frame, it's all just always the same. Look the structure. Pay attention to it. Okay, let's see if this. What do we have here? We have bearish structure. We don't have still bullish, so we need to wait. We have here equal lows. We have here this other block. Yes, we have everything. We have this break, but this is not enough. And besides, and upon every structure here, we have time frames, and we have higher time frames. So 15 seconds is not going to determine what's going to happen on the 15-minute chart or on the 5-minute chart. Never. We can only find convergence here, confluence, and yes, now we are. Well, this could be on the. You see on the 5-minute chart, this is already the other block. So we can take this whole candle here and expect some kind of reaction. Problem for me here when I'm looking at this chart is that I've seen these wicks. So all these wicks means that these inefficiencies here, this were fair value gap here was mitigated, and this fair value gap here, imbalance was mitigated. So let's call imbalance everything. And this imbalance here was already mitigated. So, well, yes, this is the order block, but we have a lot of already traded areas here twice. Down, first to the downside, first to the upside, downside, downside, downside twice. So I'm not really trusting a lot this structure. I need to find something cleaner. Maybe I will either move into a lower time frame or a lower or a higher time frame, depends on what I see. So here, for instance, the 3-minute chart is looking good because it confirms here these equal lows, and unfortunately this other block it's already mitigated, and this one maybe isn't. So let's see this mitigated. So we need to check these details. Unless we see, of course, a strong reaction. Let's say let's go to a 1-minute chart and see. So the 1-minute chart, it's saying here, okay, liquidity is taken. It's been taken from this low area, but let me see. But this is a really different move. So this is going to be broken by this other block, most likely. We're still looking for bullish liquidity down. We had this other block here, and prices just touched this other block, and now they're breaking down because, yeah, see, because first of all we've not reached here a higher time frame liquidity area. Secondly, structure is bearish, and in third place, what you see this more or less rapid move to the downside, and now you've seen a new structure being created here, level 1, level 2, and level 3 of the market maker sell model. So now a lot of people will start to sell seeing this strong down move. That's not right here, unless we're expecting prices to move lower, which is not the case in this necessarily, because what? Because we have still other blocks here. So for instance, this other block could hold, this other block could hold. And why? Because we should be selling here at the top, or here, not here when prices have been already falling for a long time. And I mean, we could be selling, for instance, I go to the 5-second chart. Yes, of course, I can sell this order block on the 5-second chart. So let me just mark it, or on the 1-second chart. But this wouldn't give us a range enough to cover the commissions, the cost of trading. So that wouldn't be wise. So let's just wait for prices to just finish falling. So as prices are reaching these other blocks, and now we should be paying attention to these levels, because we never know if one level is going to hold, if it is, and for how long. So now here, this is 2 minutes, also order block in 3 minutes, so we can go to the 5-second chart, and this is a example because we will use in normally 1 hour, 4 hours, and going down to other. And we can see here interesting thing: level 1, level 2, level 3, or level 1, level 2, level 3. Now if this is broken to, so now it's interesting because on level, this is the 5-second chart, huh? Because here we start to see bullish programs. Can you see? Because now we are within the liquidity area of the higher. So now these order blocks down here could be holding prices, and this order block here could be holding prices as long as price doesn't reach these highs. Okay, these highs would be the target. So what do I mean with this? While when this order block is broken, prices come back into it, you could be buying it. But now we are already late. See? Now we have already reached this high area, so now this becomes premium and this becomes discount. So this is equilibrium, but this is equal lows. You see? And what happened here? We reach a order block of a higher time frame, and we see the reaction to the lower time frame. So that's what I'm doing when I'm showing the 1 minute chart, but I'm just checking the 1 hour or 4 hour chart. I'm doing this. So I cannot do this in a half an hour video or an hourly video, because that would mean we should stay here for 1 week. Okay. So now we have another order block, okay, here. And could you be buying it? Well, if you see on the lower time frame a market maker buy program, you could, unless you see it. So you see here is level 1, level 2, level 3, reaction here. Now prices just you need to see if prices are going to fall down into this order block right here. Now if prices are reaching the order block, are prices going to create another buying program, level 1, level 2, level 3. Now level 1, level 2, will it reach this down area of the block? Now you are testing this other block right here, but you should wait. Now testing liquidity from the outside. Okay, now let's see where it's going, that price, where it's going. Is it going to retest this other block right here now? Level 1, level 2, level 3, level infinite. A lot of levels here, so this is not creating an actual market maker program at this time frame at least. So let's go to the 1 second chart, and now we can see it's reacting here. So when testing this other block here, you could start to see level 1, level 2, level 3. This is a sell program, and this is a buy program, level 1, level 2, level 3, more or less. Now you should start to see prices just to undo all the path they were doing when they reached this order block area at a very low time frame. So not testing order block, you can buy this order block and just now setting to break even, hoping what price is moving up here, otherwise closing at break even. So I know it's 1 second chart, but otherwise I would stay all day here explaining what I want to say. Now, if you bought this other block here, now prices are moving up this here, taking this. Now you can move your stop above these other blocks. So this is a retest. This is the new order block right here, another block which is created. So you could move your stop loss here and hoping here and hoping prices just still moving up. Otherwise you're stopped out here. And now another order block right here. So you can now take partials and or just moving again. Now you're out the trade. You see, and now price is moving down. Where to take liquidity from where? From unmitigated areas. That could be probably all the blocks like here. This other block right here was the cause. And what do you have? Another block here. Can you see? prices, let me, and now you need to check in hindsight. So now prices break its structure. How you see how they break its structure right here? Now you can be selling. So you have the mitigation block here. Okay, so mitigation block, or the blocks here. Now the mitigation, boom. You can see if for the mitigation you have a sell model on our time frames, level 1, level 2, level 3 at the mitigation area. So you could sell the mitigation right here. Right now you could be selling this mitigation and see if it delivers prices to the downside, because what? You're now reaching for those lows, reaching for this low. Why? Because there is a break in market structure. Okay. Now move to break even. Always take partials. What you're expecting now, prices to do either retest this other block or move up. So this is the 1 second chart. So here we have a horizontal line, just taking liquidity from below in order to move up. Okay, was just so is this order block that is creating this delivery prices, where too this already has been tested, so this is not of interest. Probably it is moving higher, where to? Here at least, and higher. Okay, so now you are in this other block is delivering prices down. Now 1, 2, and 3. Now you will be prices moving down probably after the market maker sell model. Where is the first other block? This one. Could this hold? Yes, absolutely, it could hold this other block, because what are you moving towards to? You're moving towards these equal highs here, and this other block could hold. Therefore, now this other block tested this other block, and it's moving towards these highs here. See, it's all the time the same. So I mean, this other block is tested by this other block. This other block was holding, this other block was holding, and now your prices are being delivered to the upside. And ultimately is this other block the one that it's moving prices. So since we are targeting other blocks at this time frame, this is the line, this is the ultimate line we should be closing here. So now obviously you should be taking partials all the time. Now we see another change, breaking market structure here. Okay, you could be like, okay, let's move the stop here and see if it's just a mitigation or it's actually a breaking market structure. So hopefully prices have already moved up to this area here, so they are likely to move higher, but you don't know. And you should protect your trades, because nothing tells you that this other block is going to fall to hold this other block right here. It could fall, it couldn't. Level 1, level 2, level 3 levels into this other block, there are chances for it to hold. So let's put your stop here, for instance, and see how it holds. Now it's taking liquidity from there and taking the highs, and you can see it. Now we have this other block right here, and now we are premium, so we should be taking most of the profits, should be taking here, and this other block should be the ultimate level to be respected. If it breaks, if it falls, then we have a shift in market structure as well. So I think you get the idea, because now we have this area of consolidation, which in relative terms, with this is discount, this is premium. So discount from premium, buy low, sell high. So if this doesn't hold, this now we started what? The accumulation from this distribution program. So let's go for the 5 second chart. I'm going to be, I don't know if you follow me, I hope you are. If you are introduced to ICT, you will be follow me. And this is the 5 second chart. I go to the 1 minute chart, because if I need to, you know what happens, I already recorded this video before, and it was a mess because I was trying to trade at the same time. So obviously what we are reaching for is this other block right here, the 1 minute chart. And so now 1 minute chart to 5 second chart. Let's see what it's on the 15 second chart. This is the area of interest, 5 seconds. So let me just take a look. So this is to Okay, so here we have the structure. Level 1 of the market maker program, level 2 of the market maker program, and what to there are several ways in which we could see it. So now see the strength. Maybe we are going to see now breaking market structure right here, right now. Now we have a breaking market structure. We have the break. We're at the order block level, and we have a new order block created at this liquidity area, taking all this high. So a return into this order block could be a good shot. If it happens right now after taking these lows, we have here this imbalance here. First imbalance closed, see? Second imbalance up to this order block. But see how prices used to close the first imbalance, which is an imbalance. An imbalance is the lack of orders filled, as I've told before. And we usually just take week to week. Oops, week to week. And this was the imbalance, so that was the reason why that candle closed right there to fill this imbalance. So filled. An imbalance usually is not a strong level. It's just a level that needs to be filled. So the next strong level, it's let's have this here. We need to pay attention to all lows and all highs. So we have this all low here. This was a place for strength, and we have this as well. And now we have this other block below as well. This other block right here. Okay, that starts here. Actually, starts here. The other block starts to fall, but mostly we are going to take unmitigated areas. So these equal lows, we just ignore them and place the entries below it. So you have this other block right here. You have level 1, level 2, level 3, retest of the other block, and boom, prices falling. Because this is a market maker sell model, so probably prices are going to move down and break this low. Okay, unless we see now 1, 2, and 3 again. Okay, I was not paying attention to this fact. So you see 1, 2, and 3 market maker buy model. Now other block 1, 2, 3 market maker sell model. Let's see 3 how much it expands, because there is here another inefficiency to be filled. Another here. Let's see. Very easy to see. But besides, more important that this inefficiency, we have this other block, and we have this here, this trend line, which is a bullish trend line in terms of liquidity. I mean, not in terms of retail trend line. So this falling trend line is just a bullish pattern, because there is a lot of liquidity above it, and if prices use this order block created right here, they're likely to be filling either the highs here of this trend line, or even moving up to this inefficiency that I have drawn above it. So we have this high first target is this one from this other block right one. Now we have this other block that could hold, and if it holds, it will propel prices up to this inefficiency that are out there. So we have this first one, the second other block. Yeah, and we have also this market maker sell model being created here. Market maker sell model level 1, level 2, and level 3. Equal highs, probably taking now liquidity from the side and falling. Now falling because we have this market maker model in 3 steps. And still the order block is this one, filling the inefficiency right there. See, it's filled. Now we have this other block, and we have the market maker sell model here completed, the other block completed, and we need to wait now for the market maker sell model to speak if we want to sell. Otherwise, we can still be buying here. From here, if we consider that this is still a valid order block, because from the high to the bottom, to the low, and see, besides, now we have this consolidation, and we need to pay attention to what we see, because there is of course the fair value gap, I forgot to mention, or I'm going to say the imbalance. Okay, it's more exact that we generic live mode is from this to here, and we also had this, so let's limit it. It's not filled yet. This other block is not retested. This imbalance is not filled. Well, yes, it is retested because it used, see this other block area here, prices move up and then move down. So I think it's already retested. So we're now working on this order block here, which is represented by this order block right here. Okay, maybe it's hard following me, but if you need to, I'm not going to explain everything here, of course. So you need to consider what caused this, what was causing this move to the upside. This down move. This is the last down move before this up move happened and then came down. So we have this reaction on that, and we have level 1, level 2 here. I think nope. So this was level 1. Let me see, because we need to track to understand what was happening. We need to track. So this is, yes, this is, I think, a higher time frame schema. Yes, level 1, level 2. No, not level 2. This is not a market maker sell model. Maybe this one, 1, 2, and 3. And let's see if this order block holds or not, because it's falling very, 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 very strong. So this order block that was not mitigated before could be the one that prices are selling now. So we could be buyers at this area if we see the confirmation. Let me switch to 1 second. So this is the area. It shouldn't be traded through. Now it's traded through. We're taking external ranges, so we're taking other ranges from there. So this is invalidated. So let's move to the higher time frame and see what's going on here. So now we have a bearish structure here, very bearish structure, and still these equal highs, I think, are going to be taken out before it's completely finished, this area, but not necessarily. But okay, so this is the 15 seconds chart. Okay, so the 15 second chart, it's just showing this. Okay, what happens? This. Okay, let's. So this is bullish. This is a lot of liquidity from retail traders buying this trend line, and also it has a lot of liquidity from these retail traders that now are selling, and now prices would be just buying the short positions that retail traders are taking. See, this other block could be holding now to move prices higher. This other block is being just created right now. It will be holding, maybe, probably, I think. And there should be a reason for it. This has been already. If prices fall below this low, it's going to see. So let's move to the lower time frame again and see what's going on here. So we have this. Yeah, we could expect if this holds, we are going to see prices moving higher. So we need to wait for the smart money shift. That doesn't happen yet. So this needs to create a structure like that. Okay, you see? This has been taken, this one. Now this other block should be, wow, it just failed. So now, no. Let me see what are we doing. Okay, it's just grabbing liquidity from that other block. Okay, so it's falling. It's falling. As we're seeing, this is a lot of liquidity from retail traders that had their sell stops placed here. So now the market maker is buying, and we need to see how and when the market maker's buy program ends. And for that, we need to see a break in the market structure. That still didn't happen. And I was wrong here. I thought that this could be holding. And again, because I was not looking at the higher time frames, only for that. So let's switch to the 1 minute chart. See this other block right here. These lows here. These lows, there are other blocks, the lower time frames that we cannot see. And now prices are just falling. Definitively. Now, if seen in, okay, now we are just looking at the negative part of the curve, and this still could hold. So I mean, this could hold. Why not? So if it doesn't hold, then we can just waiting for prices to just take out all these other lows, because there is not areas of interest here. So now 1 minute, let's move down to the 15 again and see what's going on here. So what it's weird for me is that these equal highs, I think they should be taken out. So you have level 1, level 2, and level 3. Now we have this breaking market structure here. We have a reasonably strong order block here, but still we don't have the break. So we have now the breaking market structure. Yes, that's right. And now we need a confirmation. We could not be just buying because we see strength here, because it could just be mitigating this order block here, which is weird because I see here equal highs. So I think that the equal highs are the target of this up move. And this is the actual order block, and this one that could be mitigated. Now, after this breaking market structure, if prices will come back again to retest these areas, we could be could be buyers, because we've taken liquidity from this unmitigated area, this untraded area, because prices came down to this, mitigated this other block, just released this other block here, and if they created another other block here, which is also equal lows, you see, but maybe if I switch to another time frame, we can see it differently. So it all depends on the time frame you're working on. So you need to be verifying among time frames to be sure of what you're doing. So from the perspective of 1 minute, yes, we have these equal highs that, okay, I don't see there is, yes, this is a fractal high, this is a higher high, so yes, this could be a break already in market structure, but now we are too high. This is the equal highs I was saying in the 15-minute chart that were to be taken, in my opinion. And this is the other block which is working right now. Now, once we have this other block traded, we should only rely on this other one. I would only rely on this other one. As a main rule of thumb, we could buy, just setting the stop loss below the other block and just letting price move up, down, until it reaches the destination it has. Because when prices start to move, they won't usually retrace us so easily. So now, by taking this other block here in the 1 minute chart, now there is a fair value gap here to be filled, this one. Now, the decision is, we need to make a decision whether we want to enter this fair value gap right now, or whether we want to wait for this other block to be filled. So there are several things to consider and explain when we do the breaker block. And the breaker block is also a concept of last move before that that was broken before, and that allowed to a lower low to be created. So just to simplify it. So now we have this and this and this. See? And this was broke here. So this becomes the breaker block. I usually don't trade breaker blocks unless I have a good reason for it. And in this case, this area was not mitigated yet. So I don't see a reason why prices should come down to take orders from here, to buy orders from here, when the markets could buy orders from here below, from the order block. So this market could buy here lower, cheaper. Why should they be buying here? I don't know why. But now I would be buying here. Okay. And to test if it works, so you need to go to the lower time frame again. It would be a buyer here. See this first fall, 1, 2, 3, yes, and this order block here. So we can refine to this order block and buy this order block. Okay, and buy. We need to be aware of the spread. Also, because now prices, let's see, this was this order block, and now you go to the lower time frame, you see 1, 2, and 3 levels matching this order block. It's also bullish signal. Still, this order block was not mitigated per se. The problem in refining is that, of course, this is 5-second refinement. It's too tight. So many times it won't work. So you just go to the 1-minute chart I was showing before, and as long as it is within this range and you see a sign of prices moving up again. So let me see what's doing this thing. Yeah, it's not retesting this order block, but this order block is not of interest. It's not for me at least. It's making equal highs here. Just retested this one. I think it's just a step. So let's go and refine this. On Forex, I refine 5 minutes. Okay, I don't refine 1 minute. Yes, I may be using one minute as a reference, but I don't refine that tight. So the actual order block, as you can see, I will just repeat it, starts here. The last down move is this one, the last down move. So if you think price is going to move up, you are good to buy within this. But I don't think prices are going to move up without retesting first this. I think this is a reasonable level for entering. Now, more things. Level 1 this week, level 2 this body, level 3 this week. Market maker sell model. Level 1 this week, level 2 this body, level 3 this week. This is the model, the market maker buy model. Now you see this other block, yes, acting as a reaction now. Level 1, level 2, level 3. Let's see if this creates a wick. Don't rush into the trade. Don't rush. Wait. Okay, now let's go to the 15-second chart. Let's go to the 5-second chart. Do you see a market maker buy model? I do not. Maybe it is there and I'm not seeing it yet, but I do not see it. So I cannot buy upon an assumption that this order block will hold. I don't see it, so I cannot buy this. Do you follow me? I thought it would be a good place for buying, but I'm not seeing the confirmation yet. So let's see, because this is not the right place I should be tracking. I need to go back again to the order block before I had here. Now I have better range to take decisions upon, and now it should be moving to the lower time frame. Of course, I will be using not 5 seconds. I'm entering 5 seconds or 15 seconds because I'm already now 1, 2, 3 down. Now we see this. Okay, now let me show you quickly. Now liquidity taken 1, 2, and now 3. Now if we see 3 and this is respected, we have a market maker buy model here. See 1, 2, 3 market maker sell model. See 1, 2, and 3 on 5 seconds. Equal lows 1, 2, 3. Now it's moving again, retesting, and it's moving above. It's moving up. It's moving up. See? Now 1 and moving up. It is now you can place for instance a sell stop here. A buy stop here. Buy stop now, and prices just letting then you can just place your stop on break even right here, a break even, and let it move. Let it move. Okay, why? Because the buy stop, the buy stop would have been opening your buy position here if prices just reach out. Now prices are just breaking structure. You have this other block here. Okay, you should be taking partials here. Your stop loss would have been here below, just here below, and prices move up. You are now like 3 to 1. Of course, you cannot do it on 5 seconds, but just imagine that you're using 5 minutes or 1 minute. And now you're good to leave this price to retest these other blocks if it does. Okay, but now you have a confluence that you needed to enter long. So some things happen to. So because why? Because I was waiting for this and I told you to wait. But when I saw this, I told you to enter. So why? Because we were on the higher time frame, bullish market, and we have this fair value gap now cleaned. So this fair value gap has been now cleaned, but this order block has been also been cleared before. So we expect now prices to move higher because this area has been already cleared before. Yeah, it could retrace a bit, but it doesn't need to do it to mitigate or to retest this. Used only to take out players from speculators like us. So now you could just set to break even. You're here, you enter here, you could place the break even or take partials and take it lower than this. Just stop and let it run. Or let it take out you out from the market, just like I think I guess I hope you can follow my explanations, because now this is coming back to test this order block right here. Okay, so it's wise for me just to allow prices to move back and forth. So taking like 60-80% here out of the market, maybe 80% after you got like 1, 2, 3, 4 to 1, 1 to 4, 5 to 1. It's a wise idea because now you can just place your stop below your range, and you have full allowance for prices to retrace. And in any case, if you leave like 20% of your initial position here opened, you already made 2 to 1, or 1 to 2, or 3 to 1 to 3. Then you still have 20%, and if you get 5 extensions, you already have made one R additionally. And if you get 1 to 10, and now start to you get a lot of you get 1 to 2, and etc. So now observe level 1, level 2, level 3 not respected. Level 1, level 2, level 2, and level 3. Level 1, level 2, level 3. Level 1, level 2, level 3. Well, level 3. See, 3 candles, and taking liquidity from below the swing low here. So you can see it. See, level 1, level 2, 3 takes liquidity, falls. Level 1, level 2, level 3 again into the other block. And what happens after? The third level just pushes prices up into this other block right here, and upon this other block right here, and now of this other block right here is created this other one right here, which is lower than the other ones. See, this lower than the other ones, and that has a very powerful wick, which means that it's a valid order block. Okay, and see, now prices are just getting higher. and that's why I say that it's worth leaving a part of your position open, because you never know if your price, if your chart is going to print a good trade for you. So, and now you're reaching these highs, and yes, this highs because the order block was mitigated, so I think it's going to pass through it. And we have this area here, this main point of interest. Now, if prices came down now and break the last low, I think it's a negative sign for you. So for instance, I would just move and trail my stop below these lows and see what happens. Inefficiency here from this week to this week, from this week to this week. Mitigation of these highs could take place. Okay, this is not a breaker. This is a mitigation block, and not actually mitigation block, but I'm going to call it as a mitigation block. I don't want to enter into details of what Michael explains on his private mentorship. I'm not going to go over it in my videos. And at the same time, you see one here, so level 1, level 2, and level 3. So you see a market maker model. It doesn't mean that it's going to fall. It means that prices are moving slow, and there is a lot of bullish liquidity below this low. So you need to be always taking that into consideration now. This order block has been created. This whole area has been created for prices to come down and mitigate it in the future. But you still are within the trade. I would just be keeping my stop here, holding it here, waiting for prices to just take the highs. The highs. Okay, it moves up. It's okay. So now we have this order block here, but be aware that this order block was not tested yet. So chances are that this is a retail trend line, level 1, level 2, and level 3. 3 levels, market maker sell model. It doesn't mean it's going to fall. It means that it's a market maker sell model, and there is a lot of liquidity from retail buyers down this trend line, and this trend line could be broken. Yeah, could be broken, and we have this order block right here. All this down move is an order block in terms of liquidity. It's not an ICT order block, of course, but it is bullish liquidity because it is the last down move before this up move occurred. So we could see prices could hold above this, not necessarily, but we have now this breaking market structure after the market maker sell model. Okay, and now we see how it's just going to take liquidity from below. It could be within this range, or within this range, inside this, or it could totally drop. We don't know. We never know. We don't know. So we have level 1, level 2, level 3. No, level 1, level 2, level 3, and we have here the end of the market maker buy model, but still we didn't break structure. We're still falling. A market maker model doesn't imply that the program is going to be triggered at that when it ends. It could be, so it's an accumulation because prices are falling. It could be a reaccumulation from this point on. But so you can go to lower time frames to see what's going on, and that's what I do. So yes, to broken. So it's 1, 2, 3, 4, 5, 6. This is a sell model yet. So it's not something you can trust on this specific. This is another trend line from the retail perspective. And as you can see, retails don't trade the 1 second chart. They don't trail it. And when I say retails, what I mean is that he usually refers to as, you see this odd block here below and this retail trend line as the non-informed money. That could be also institutions that are not trading using smart money concepts. So the other block here, this market sell model. I'm not buying here. Remember, I was just supposing that we had an opened an open trade already, and that we're expecting prices to just break all these highs and move. I think prices are going to fill this fair value gap. Okay, yet. So what time is it? It's too late. I need to close. So hopefully, I think that I could explain a bit what I'm doing on this channel, and I'm basically talking about all this on the videos: structure, fractality, order flow with all the blocks, with confirmations, multi time frame analysis, highs, lows, and confirmations. You need to confirm. Now we have this order block. Is it going to hold? I don't know. We need to go to our time frame and see what's happening there. Which areas are not imbalances. Very important imbalances are just crucial. Okay, because now we have this drop here. So we have, after this drop, we have about buy side inefficiency of some kind, always some kind. And I also talk about of other videos, expansions and accumulation. So we are likely to be trading from within those consolidations towards the expansions that will come later. And this is the main things I'm just doing here. And okay, I'm closing already because I finished already what I'm doing. It's a bit late here, and I hope this was of some help from you, and that will help you to understand the rest of the videos if you're watching them using subtitles of anything like that. Okay, that's all. Bye bye. Have a nice weekend, and see you later.